NFP, NFP, NFP. So NFP is dropping by 2:30 this week Friday West African time. And so many traders are already excited about this particular key event that drops every first Friday of the month. And also a lot of traders are going to stay away, and I would say they are going to miss the big money coming with this key event. Of course, you know that fundamentals are part of Forex. Honestly, there is a lot of money in fundamentals if you know how to trade it. And if you're among those traders that don't know how to read fundamentals, then this video is for you. Make sure you stick to the end to understand how you can read fundamental with little stress. In fact, with no stress at all. All you need is this little steps that I'm going to explain in this video. So let's get started. On my screen right here, you can already see I've pasted the data, and I'm using Forex Factory. That is my favorite app for reading news event. Of course, not reading news event. That's my favorite app to check news event. So now here comes the part where we understand how to read fundamental using the data provided to us. Of course, we have three key events that always drop with non-farm payroll, which is NFP. Now, these three key events, I will read them out. The first is average hourly earnings. And on this average hourly earnings, we have the data as follows. Forecast is 0.3%, and the previous is 0.1%. The second is the non-farm payroll itself, almighty NFP. And the data that comes with it, the forecast says 66K, that's 66,000, and the previous is 64K, 64,000. And now the last, which is the unemployment rate, we have the data as follows: 4.5% for the forecast and the previous 4.6%. Now, I'll have to say this already because I know so many traders, they only feel and they think that once the forecast is above the previous, that USD is going by, the dollar index will appreciate. That is very wrong. Depends on the type of news that the data is coming with. Sometimes higher forecast actually means that USD dollar is going to dump. Depends on the key event, like I said. So after watching this video, you understand and you'll be able to know how to read events using the data and be able to predict what effect is going to take on the market. So let's start with the average hour the first. Now, what is average hourly earning? That is the question you have to ask yourself. What is this news all about? What does it imply? And how does it affect the market anyway? How does it affect the economy? Because it's all about the economy of USA. If the economy is doing good, then good, we have a good bullish momentum from the news. So now, on this average hourly earnings, it is the earning rate of the citizen in the United States. So it is all about the earning. And to be sincere, if a country or if the citizens are earning good, there will be more spendings and the life will be more better. And we can say that the country is doing good because the citizens are okay. There is no inflation or famine or something like that, or lack of money. Okay, in the country. So the country is doing good, and once the country is doing good, the currency are always doing good itself. So investors are always interested in that particular currency because they know that if they come in there, whatever they come with, they are going to sell it. That is just one key takeaway. And now concerning the NFP itself, which we have the 66K as the forecast and the 64K as the previous. Now, mind you, on the average hourly earnings, I have to take your attention back there. The forecast is above the previous. We have the forecast at 0.3%, while the previous was 0.1%. So this is actually telling us that the citizens are living more better now compared to the last data that was last month, right? So the citizens can spend easily, which means they are getting paid and the country is okay. All right. So whatever they are doing, they are getting money. Money flow is good in the country, it's stable. That's what it literally implies. And if a country money flow is good, like I said, the country is doing well. The citizens are happy. So now non-farm employment, non-farm payroll is all about the governmental job sector. Aside from the agricultural sector or farming sector, aside from that, this actually it is all about the jobs created by the United States government. So reading this event, we actually tell how the economy is going to be. So here we have the data saying that there is 66,000 jobs created newly. and the job created is above the previous, which is 64,000, right? 64,000. You can see that extra jobs has been added. Extra jobs has been added. So the citizens are mostly occupied. So the earnings is good. Most citizens will get paid at the end of the month. That is one key takeaway, and that is what non-farm payroll is all about. It's all about the jobs created by the government aside the farming sector area. So now at the unemployment rate, which is the last, we have the data 4.5% forecast, which is lower than the previous this time, right? Which is lower than the previous. Now, what does it actually tell you? It's telling us that there are still unemployed people in the United States, and this time 1% lower than the previous data. But now, how do we tell what the United States dollar is going to do with these three key factor events? So let me explain it and round this video up. So judging with the first data event, which is the average hourly earning, we find out that United States citizens are living more good now. They can spend easily because they are getting paid at the end of the month. Some of them are occupied with work, so there is enough job for them. All right. So the average spending in the country is good. That is one key takeaway. This also tells us a bullish currency, a currency that is doing well. The economy that is doing well, the currency appreciates. Now, judging with the second event, which is the NFP itself, it also gives us an insight that is more job is created, more jobs are created than the last month, which also gives us a more good mindset and bias that the economy is even getting more better because the citizens are going to get employed, right? So these two events corresponds, they correspond, right? More jobs, good economy, good earnings, the more you spend. Because if you have money, at least you'll be able to buy. You wouldn't be saving for rainy days because you know that you're getting paid at the end of the month, right? So that is a good example of a good economy and a good currency. Now, the last, which is the unemployment rate, is the one that is different, which is lower than the previous. So which means we still have 1% people unemployed than the previous data stated. Let's round this up very quickly. What does the whole conclusion of the matter is telling us? Judging from these three key events, we can see that the average hourly earnings are higher, that citizens are earning, and their earnings is higher compared to the last one, which means more jobs are created in addition, because if you're working, you'll be earning. That is one thing. And on the non-farm payroll itself, that the NFP data is still in line with the average hourly earnings. More jobs are created, and this concludes and gives us that more citizens is going to be employed this time around, because more citizens will get to find work. They will be busy and there will be payouts. More citizens is going to receive salary, so the country is doing very, very well. Enough money flow, right? That is another thing. And coming to the last, which is the unemployment rate, we can see that less people are even employed this time compared to last one. We have 4.6 people unemployed in the United States. If you divide it by 100%, you see that on the United States last data event, we have 4.6 people unemployed. So it was doing bad then. The data says that United States that economy was doing bad compared to this data, because now United States has shortened it by 1%, which means more people are employed now. Now, using these three key fundamentals to ascertain and know the direction the market is going to take, is I think it's very obvious to everyone now that the market is going to appreciate, because overall we have good data backing up the currency of the United States dollars. One, good earnings, which means you can spend more easily, you can do what you want, and the country is good. Two, more job creation. The country is doing perfectly, it's creating more jobs, less inflation, and less rate cuts. And three, less people are employed this time around, which means the country is doing well in the economy, right? The economy is doing well. So this actually tells us one thing, that bullish movement is coming on this NFP. This is my own analysis and bias on NFP dropping by 2:30 this Friday. Just like I said, this is not a trading advice or it's not a financial advice. I'm doing this because this is how I've been reading my own fundamental and it has been working for me. And all of that title, it does not work because no strategy on the forex market works 100%, but at least it was 80 to 90% for me. And this is how I've been reading and deciphering my fundamentals, and it has been very, very much okay for me. So if you love what you just heard and you like the information, you know what to do. I will catch you all later next time. Peace.